Today we're digging into a real head-scratcher from the Indian stock market. It's a story about an industry that, by all accounts, should have been in serious trouble. But instead, its stocks went through the roof. Okay, let's get into it.
So here's the big question, right? You've got an energy crisis, squeezing natural gas supplies, which is, the main ingredient for making fertilizer. So logically, these companies should be hurting. Badly. But the market? It started telling a completely different story.
And this number is what that story looks like. In just one day, on March 10th, the stock for a company called Fertilizers and Chemicals Travancore, we'll just call them FACT, it just skyrocketed, up over 18%. This wasn't just a small bump, it was a huge vote of confidence from investors. But why? Now this is where it gets kind of wild. Just look at the trading volume here. On a normal day, FACT might see about 1.17 lakh shares traded. But on that one day, March 10th, that number exploded to over 78 lakh shares. That's almost a 67 times increase. Investors weren't just showing interest, they were practically falling over each other to get a piece of this company.
Okay, so to really understand this market madness, it all boils down to two key things. Two big drivers that completely flip the script for the entire fertilizer sector.
The first driver is actually pretty straightforward. Even as one crisis was messing with supply, another market force was actually helping out. Global oil prices had dropped, pretty significantly actually, by about 25 to 30%. And since natural gas prices are often tied to crude, that meant the main raw material for fertilizer was suddenly getting cheaper. And for any manufacturer, that is always good news.
But, cheaper gas doesn't do you any good if you can't get your hands on it. And this is where the second, and honestly the much more powerful driver, comes into play. The Indian government stepped in with something called the Natural Gas Supply Regulation Order. And this wasn't just some recommendation. It was a full-on directive that changed the entire game of who gets gas when there's a shortage.
So here's how this order worked. And this is the crucial part. The government basically created a priority list. At the very top, priority 1, you've got essential stuff like cooking gas for homes and fuel for transport. They get 100% of what they need. But look who's right there in priority 2. Fertilizer plants. They were guaranteed 70% of their gas supply. So in the middle of a huge supply crunch, the fertilizer industry basically got a VIP pass to the front of the line, ensuring their factories could stay open.
All right, so let's zoom back in on FACT, that company whose stock shot up 18%. Because when you pop the hood and look at the company's actual health, the market's reaction starts to look, well, a little extreme, maybe even irrational. And wow, this slide just says it all, doesn't it? It's a tale of two completely different stories. On one side, you've got the stock market telling a story of incredible optimism, with the price soaring. But on the other side, you have the company's own financial reports telling a much grimmer story. Profits had actually crashed by almost 68%. This right here is the puzzle. Why was a struggling company's stock flying so high?
And the red flags just keep coming. The company's price-to-earnings ratio, which is a key way to measure how expensive a stock is, was over 3,000. To put that in perspective, that is just astronomically high. Then you look at its return on equity, which measures profitability, and it's a tiny 3%. These are not the kinds of numbers you expect to see for a company that's valued at over 52,000 crore rupees.
So it all begs the question. Why would the government go so far to protect this one industry, knowing it might create this kind of market bubble? Well, the answer really comes down to just how important this sector is to the entire country. This number right here, this explains everything. More than half of India's entire workforce is in agriculture, so making sure farmers can get affordable fertilizer isn't just about business. It's about food security. It's about social stability. It directly impacts the lives and jobs of hundreds of millions of people.
And you can see how important the fertilizer sector is from an energy standpoint too. It uses a staggering 30% of the entire country's natural gas. When a single industry is that huge and that vital, you can bet the government is going to build a protective wall around it when a crisis hits.
But, and this is a really big but, all of this government protection and market excitement can easily hide some very real problems lying just beneath the surface. So before we finish, we have to inject a little dose of reality and look at the risks that many investors might be ignoring.
So let's just run through these risks. First, that 70% gas guarantee, it's also a 70% ceiling, which might stop them from running at full power. Second, the whole industry relies on government subsidies, and those payments are often delayed, which is a huge problem.
Third, like we saw with fat, the company wasn't exactly in great shape before the crisis. Fourth, that crazy high stock valuation. It's really hard to see how future profits could ever justify that price. And finally, the government owns 90% of Fact. That means very few shares are actually available to trade, which can make the price swing all over the place.
And hey, you don't have to take my word for it. Here's what one equity strategist, Kranti Bahini, had to say. He's basically warning people to be careful. He says with all the volatility, it's probably not a great time for new investors to start buying in at these super high levels.
And that really brings us to our final big question. The government safety net was clearly a lifeline, and it created this incredible surge of optimism in the market. But is that protection a real bridge to long-term genuine stability for these companies? Or is it just masking some very deep fundamental risks that the market has simply decided to ignore for now? That's the real multi-billion-dollar question at the heart of this whole Indian fertilizer puzzle.